Hello and welcome to our show today. I'm really glad you could join us. I mean, this is going to be one of my favorite shows I think ever because the topic we're about to dive into is one of my absolute favorites because this is one of, well, no, it is the best funding product I've ever seen for startups and one of the best funding products I've ever seen just for business funding in general. So with us today is Jack McColl. Now, Jack is actually the founder of Credit Stacking and has been featured on MarketWatch, Disrupt Magazine, Yahoo Finance, and many other publications and podcasts for his knowledge and in-depth understanding of the credit stacking strategy. Jack has mentored thousands of entrepreneurs and been part of a growing multiple seven-figure businesses. I'm really glad he can join us. Jack, thanks for coming on today.
Ty, thank you so much, man. I've been really looking forward to this show.
Yeah, I'm really looking forward to having you, man. Like I said, your product is probably one of the smartest that I've ever seen, but what you're doing with it, I've never seen anybody do, man. So just kudos to you for being the trendsetter that you are.
Yeah, thank you. Thank you so much, Ty. I think when people have access to money, their success in business dramatically increases. And you don't even need to have money, you just need access to money. And I've found the easiest access to money is through business credit. That's first step. And then second step is to figure out how to allocate that money, how to start a business, where to invest. But the key really for me, and I've learned it over the last 2 years, I went from not even knowing about business credit. I've been in business for 8 years. For the first 6 of those years, I had no idea about business credit. I was embarrassed at that point. I was like, wait, I've been in business, not knowing about the power of business credit, and it completely rocked my world, completely changed everything. So to get access to money is always the first step. And, I'm here to, just like you are, Ty, educate people on how to get access to money and help them be more successful financially.
So let's give us some insight. I'm familiar with what you do. A lot of people aren't familiar with what you do. You do credit stacking. That's your brand as well. So what is it that you do?
Ultimately, I show people how to get access to large amounts of capital in a short period of time. And so basically, you're able to do that by making yourself attractive to these lenders. And once you're attractive, they want to lend you money. And there's a big difference between personal credit and business credit, where the business credit cards don't actually report to your personal credit profile, which is incredible because that allows you to apply for 10 to 15 business cards on every credit stack. Then you can max those credit cards out, use that money to start a business, scale your business, or even to invest into literally anything and keeping your personal credit score high. And so like right now, I have an 800 FICO score. I went from 0 business cards to getting approved for $500,000 in business credit in a year and a half. And so like this is really possible for anyone listening to this call. Even if you have messed up credit, any credit profile is fixable. And with the right strategies, you can get access to 6 figures in credit very easily to help you scale in business.
So credit stacking, what you said is we're basically getting credit cards, but we're really focusing a lot on business credit cards that report to the business credit reporting agency. So we can max them out. It doesn't adversely affect utilization on the consumer credit side because it's not reported on the consumer FICO score. Is that a pretty good summary?
Exactly. And for the longest time, I had no idea about that. And that's the key. Like your personal credit is important because you're leveraging that to get approved for these business cards. But then once you get approved for the business cards, they do not report to your personal credit. And so you can go from bank to bank to bank to bank, and none of those banks can see what each of those lenders have given you. And then, like I said, you max it out, the utilization doesn't report. So your personal credit score stays high, and now you're fully utilized on the business side.
Sure. So you're ultimately using good credit to be able to get the credit lines. Credit lines help build the business credit. And then, as you said in the very beginning, the building of the business credit then makes you more lendable and then unlocks and makes it easier to get loans, credit lines, et cetera.
Exactly. It just unlocks your entire life.
So what's interesting is that a lot of people might look at this and say, well, why don't I just go get credit cards on my own, right? I'm sure it's what you hear. That's what I hear as well. I know the answer, but I want to hear it from you. So what is so much different than what you do than somebody that just says, okay, that makes sense. I'm going to go apply for a bunch of credit cards on my own right now.
Yeah, I mean, the thing is, there's such a massive lack of education, and I think the banks don't want people to know their internal bank rules. They want to make it confusing for people. And really, this education is not taught anywhere unless, it's people like you and me to provide the education. So there's very specific things that lenders are looking for on their business structure, business formation, also on their personal credit. And there's just so many technicalities that it's really hard to figure it out. But over experience, trial and error, talking with high-level relationship managers at these financial institutions, we're guys like you and me, we're able to figure out what they're looking for. And then once we know that, we can actually help people fully optimize their credit profile to make them as attractive as possible. And once you get to that point, it's so easy to get approved for credit.
Yeah, and you've got a phenomenal training program. And I think in your training program, because it's not just like, here's a list of cards to apply for. It's very subjective, I think. I mean, what works for me is not going to work for you. So based on my scenario, I'm going to go and apply for certain cards in a certain order than what you would, right?
Exactly, because every bank has different things that they're looking for. Also, each bank will pull from a different bureau, and that's based on location. So, like U.S. Bank in Florida might pull from a different bureau than U.S. Bank in Washington. And basically, once you have too many inquiries on each of your bureaus, that can limit you from getting more cards. So it's very strategic on finding banks and cards that will pull from strategic bureaus. And we have resources with all these different data points to know what bureau each bank is going to pull for, and then really giving people a step-by-step order of the cards to apply for, what to apply for, how to apply for them, and then when to apply for them. And that just maximizes everything.
Because what a lot of people don't realize is that if Bank of America sees Wells Fargo and Chase inquiries on your consumer credit report, they might not approve you at all or approve you for a lesser amount. So what you're doing is saying, okay, I know that US Bank in Florida pulls from TransUnion, and I know that Wells Fargo in Florida pulls from Equifax. So if I apply for both of those, they're not going to overlap, and that's going to help me get max credit because one won't see the inquiry from the other.
Exactly. And basically at that point, we're just playing Tetris with the inquiries, right? And so once you have, 3 inquiries on each bureau in the last 6 months, it makes it a little bit more difficult to get approved for credit. So we're very strategic on really maximizing those inquiry pulls.
So when you're looking at the right cards for in your coaching program, when you're helping people understand the right cards, what other factors are there? Do you take into account 0% rates? Do you take into account points and cash back? Or like what other factors are you looking at? Or is it just max approvals who will give us the highest amount of money? Is it where they report to? Is it all these things?
Yeah, good question. It really depends on the type of business someone has and their intent with the money. For a lot of the clients that I work with, they're mainly interested in the 0% interest cards. Those are the cards that have 0% interest for the introductory period. This could be 9 months, 12 months, even up to 18 months. And so we're really focusing on the 0% cards. Like US Bank, for example, they have a 0% card for 18 months. They'll give out $50,000 limits. And so I also have another resource. It's called the Business Card Locator. We're able to see what top banks that are in all 50 states that have 0% interest business cards. And a big thing about applying for credit is the relationship you have with that bank. And so I always tell people you want to be building relationships with banks that have 0% interest business cards if that's what you're interested in getting. And for me and like a lot of my clients, that is what we're looking to do, get these 0% interest cards and just maximize our funding.
So when you get the 0% cards or the cards from the bank, right? Each bank can have, gosh, man, how many credit cards per bank, right? Barclays has, they don't have a credit card. They have, I don't know how many credit cards. Chase says, I don't know how many credit cards. So you help your clients and drill down, not just the bank, but the actual specific card that might work best for them. And do you have them ever get multiple cards at the same bank?
Yeah, for sure. Like Chase, for example, they have multiple 0% cards, and you can also get the same card for different entities. So if you have 2 entities, then you can get 2 cards from Chase on that same exact card. If someone has like an e-commerce business, for example, we'll focus on also getting charge cards, basically cards that has the spending power increase every single month. But if someone wants to use a business credit card to finance an investment, then you want to do a 0% card. And if you ever have an investment that will make an ROI into 1 to 2 year period, then I'm the biggest advocate of using a business credit card to fund that investment while putting my hard-earned cash into long-term investments. And so people might be wondering, how do you finance an investment with a credit card? And so there's actually easy ways to turn that credit into cash by just running it through a merchant processor. So after you get a $50,000 card, then you can get essentially $50,000 in cash and then using that cash into an investment. For example, like a real estate fix and flip deal, use that money for the down payment on the house, the renovations, and then you flip the house and then you pay off the card.
So an example of this is I can't take a Visa card and go to a title company and buy a house. They won't let me do that. So if I want to do that, then I have to liquidate the card. I have to pull the cash out of the card. The problem with credit cards typically is that if I take cash out, it's a 20% merchant cash advance type fee. But what you're saying is that you can take these cards, run them through a merchant processor, like they're charging you 20 grand. They give you the 20 grand. You only pay a small merchant fee and then get that cash out at 0%.
Exactly, Ty. And the last thing you want to do is a cash advance, like you mentioned, but you run it through a merchant processor. Say your friend has a merchant processor, like a Stripe account. They can invoice you for that 20, 30, 40, 50K, and then you'll just eat that 3% fee, but then it'll turn around to cash, and now you can do anything with that cash.
Now, how do you usually recommend to your clients they do that? Do they go to a friend? Is there a certain process? Do they go to you to do it? Because a lot of people might not have somebody that, I mean, that's a pretty big trust element, right? Like if I'm going to say, hey man, I'm going to process 20 grand. I need you to give me the 20 grand in cash. So who do you recommend they go to do that liquidation process?
Yeah, definitely a trust factor there. I actually have a partner in my credit stacking mentorship group. He does the card liquidations for all my clients. Essentially, he just charges a 2% fee on top. So you pay 5%, you have the money next day. So he'll send you an invoice for 50K. The next day, 24 hours later, you're going to have that same amount minus 5%. You can also, pay like up to $10,000 via PayPal, friends and family, Venmo. You want to be a little bit careful with that because if you do that frequently, they'll catch on and close your card. But the best way to do it is through a merchant processor. And we have a partner in the program that helps out with that.
So to get this kind of program, what kind of things do you need? I mean, sometimes you need collateral, sometimes you need, consistent cash flow, bank statements, tax returns. Well, let's start there. What kind of documentation is needed income wise in order to get approved for these kind of cards?
No documentation whatsoever.
So it's no doc. I don't need bank statements. I don't need tax returns. So if I got problems there, I'm just starting a business, I don't have them, then I don't need any of that in order to get approved.
No documentation whatsoever. All you need is good credit and a relationship with the bank. And so by good credit, we're talking about 720 up, ideally 750 up. You want to have less than 10% utilization on every single account on your personal credit profile. You want less than 3 hard inquiries on each bureau in the last 6 months. Ideally, you'll have 4 to 5 primary accounts reporting to your credit profile. You're going to want at least average age of 2 to 5 or even more years of age. And then once your credit profile is looking good, you want to then start building relationships with these lenders. And so by building relationships, either by getting like a personal card, by opening up a business checking account, putting some money in that business checking account, letting that sit for 1 to 6 weeks, that builds the relationship with that bank. And by having that account open before the card application dramatically helps. And then when it comes to applying for the card, there's a few ways to do it. You can do it online, in branch. I have found the best way to apply for cards is actually through a relationship manager. These are generally like high-level individuals that work at the branches. Sometimes they're not the easiest to get in contact with, but applying through a business relationship manager at these banks is the best by far I've seen.
Yeah, to get the most amount of money.
Yeah, because at this point, basically that application goes to the underwriting team, which is a human, right? It's not just an algorithm like an online application. It goes to the underwriting team. They're looking at your application, and we're getting college graduates $50,000 0% cards. Like I got my first business credit card a year and a half ago at age 26. We're getting 21-year-old people $50,000 0% cards. Like I can't even imagine how much farther ahead I would be if I was getting access to that money that young.
How much money can somebody really get with this? And then what determines how much somebody can get approved for?
It really depends on their income, the business type, and the business estimated revenue, and then their personal credit profile, and then also the relationship with the bank. So you also don't even need a business that's that old. We're getting brand new businesses, 2 to 6 months old, 6 figures in 0% interest credit. And so your personal income, that's going to come into factor. We've never seen that verified. Sometimes American Express will verify that, but from my experience, that's basically an honor system on the amount of personal income you're stating. When it comes to estimated revenue for the business, you want to say something that's realistic, but it's estimated revenue. And we've seen that consulting businesses, e-commerce businesses, and marketing agencies will get the most amount of funding from my experience. And even if you have like a high risk business, like a trucking business, maybe a restaurant business, anything that has very high fixed costs, sometimes it's even more beneficial to start a brand new consulting business set up properly, and you'll get more funding from what we've seen on that brand new business in consulting than an older business that's in the high risk category.
So you help them select like NAICS or industry codes. It's very specific to put them in the categories that will help them get approved for the maximum amount of money.
Exactly. Yeah. The NAICS codes are huge. I know you're big on that, Ty, but having that code accurate is so important. A lot of times when I'll have students go open up business checking accounts, I want them to have that code either in their phone notes or on a piece of paper, and making sure that code is accurately put in when they make their bank account.
How important really is that?
It is so important. If they mistakenly give you the wrong code for your classification, that could immediately put you in a high risk category. And when you're in high risk, it is going to ruin your funding. So you want to be in low risk, and you want to make sure it's as accurate as possible, because that's going to help you out so much.
That's awesome. And your program teaches the best industry specific codes and best industries to actually to be in that get the maximum funding.
100%. And the things like you're a huge advocate of, also, Ty, is like, your business website, getting in the directories, having a business phone number, business email, all those things on the business setup is so crucial for your foundation of success and funding.
Sure. What's interesting is I asked you about what factors tied into how much you get, you didn't say anything about existing card limits. So is that really a minor factor compared to projected revenue, income, these other things?
That's a really good question. Previously, I thought that was a bigger issue, but we've gotten people approved for six figures and 0% funding with only about $30,000 in collective limits on the personal side, if not less. Comparable credit, it does play a factor. We generally want to see a client to have at least one card over a $10,000 limit on the personal side. But I've also ran into the situation personally where I'll have like $80,000 in personal credit, and I'm going for a Chase card, and they said I couldn't get the 50K Chase card. You're going to get a 25K business Chase card because you have so much personal credit. And so I've actually seen the negative effect where if you have too much personal credit, that could affect you. And that actually really goes to the credit mix. Someone like myself, I only have revolving credit products on my credit profile. No auto loans, no mortgage, no student loans, no installments. And because I'm at 100% revolving, very high revolving, it actually limited me to getting approved for a higher business credit card limit.
That's crazy. I never even thought of that before. But it makes a lot of sense. I mean, because your utilization has to be low to get approved. So if you have all this credit that you have and you're not using, then they're not going to want to give you a bunch more because you're not using the credit that you have.
Yeah, it's pretty interesting how they think. I really think the best foundation is to have 4 to 5 cards on the personal side, with a couple of them being over that $10,000 limit. I think anywhere between collective personal credit of $20,000 to $60,000, also spread across multiple banks. You don't want to stack all your personal credit at Chase or American Express, but you want to kind of spread it across. I'll generally recommend, get a personal card or 2 at Chase, Bank of America, American Express, maybe a US bank. And by getting those personal cards spread, you're also building the relationship with each of those banks, right? Because if they see you have a personal card for the last 6 months, 12 months, they're starting to trust you. They see you open up a business checking account, they're trusting you more and more. So that's ultimately going to help you out get bigger limits.
Should I do that? Should I have a checking account with Bank of America, with Wells Fargo, with Chase, as well as personal cards? Like if I did that, that would increase my chances of being able to get approved for business cards with each of those sources.
100%. I think if you have a personal card with history on it and you have a business checking account, I think that's going to set you up for success.
Even if I'm not running a bunch of money, because I can't run a bunch of money through all of the business accounts, right? That would just get confusing. So even if I'm not running a bunch of money through the business account,
even if you can't, it still helps to have that relationship, to show them like you're dedicated to being a customer. Hopefully you can put some money in it. And I generally recommend have at least $5,000 in that checking account before applying for the business card. But regardless, if you have that account opened, it will help you.
Yeah, that's interesting, because the big banks, with their internal bank rating, that would make sense. I mean, if you even have 10,000 in there, that would dramatically increase your chances of getting approved. Speaking of approved, you mentioned a lot of criteria that not a lot, but you mentioned the criteria that's specific to getting approved. What if I don't have that? Like, what if my score is not 750? What if it's 650? What if I don't have $10,000 limits? Can I use somebody else's credit? Is there another way that I'm able to tap into this to be able to get approved?
Yeah, I mean, so one thing you can do is get listed as an authorized user on someone else's account. That's going to add that credit age and credit history onto your credit profile. If you have any late payments, derogatory marks, anything negative, anything is disputable. You can get anything removed, any collections, charge-offs. There's really no reason why someone should not have at least a 700 score unless something's wrong. And if something's wrong, you can fix it. So utilization is huge. Late payments, negative items, get that sorted first, making sure you at least have a 650, ideally above a 700, 720, and then going from there. And a good way to add age, add collective limits and history, like age, is to get listed as an authorized user on someone else's card that has really good age.
But does that, how much of a factor does that have? Like if I'm an authorized user on my dad's credit cards and I don't have but one or two on my own, is it a big problem? Do they really look seriously at authorized user, or is it just that the AU account, the authorized user, boosts my score?
One, it will boost your score and your age. The score puts you in a different category. Obviously, they're weighted a lot less than a primary, but ultimately it can help you put you in that extra, that higher category of score, which can definitely help.
Sure. Makes sense because utilization is 30% of your FICO. So I get added the dad's credit, $20,000 credit card, boom, tons of available credit. And then the third biggest aspect of the credit score, which a lot of people don't know, is how long you've had credit for. So, and there's only one thing you can ever do to improve that, which is AU accounts, which is what you're saying. So by getting out as an authorized user, I improve my credit mix, I improve my utilization, I improve my length of credit history. That boosts my scores and makes it easier to get approved for more funding.
Exactly.
When it comes to fixing credit, what do you recommend there? Do I go to somebody to fix my credit if it's bad or have problems? Do I fix it myself? Does your coaching program kind of guide me of which path and how to go about that to get the best result?
Yeah, I mean, so there's two ways to do it: either yourself or you hire a company. We provide all of our students with the right dispute templates that they can then send in and dispute late payments, derogatory marks like charge-offs and collections, or you just hire a professional. We have a service that does it as well, but there's tons of credit repair companies that will dispute this for you. Generally, that's the easiest way to go because then you don't have to think about it and you can focus on your business and your investments, your life. But if you have negative things, you have to get those taken care of first. If you have charge-offs or anything negative, it's going to dramatically ruin your funding.
So with this, it doesn't sound like I need collateral. It's credit card, so it's unsecured. I don't need cash flow. It's no doc. So this was really driven by credit alone, and the quality of the credit is really going to determine if I get approved and how much I'm going to get.
Yeah, 100%.
So don't even go into this unless you're fixing that.
Yeah, I mean, it's fix your credit profile, optimize it, build banking relationships, and then apply for credit.
So when you're doing that, well, I guess I can't ask you how long because it's going to be different for every scenario. Okay, so what kinds of funding can I get? Does everything report to the business credit reporting agencies that you get me?
No, it's actually quite interesting. So once you're getting like a traditional 0% business card, to my knowledge, there's only one card or one type of card that actually reports to the business credit bureaus. So there's the consumer credit bureaus and the business credit bureaus. Traditional business cards actually don't report to either, unless it's like the Chase Business Inc. We've seen to report to the business credit bureaus, but they kind of sit in that limbo, which is kind of a pro and con. The main pro is it doesn't report to the personal credit, but it also doesn't report to the business credit bureaus. And so how to take it to the next level, as you're very familiar with, Ty, is getting vendor trade lines that report to the business credit bureaus like Dun & Bradstreet, Experience Small Business. And that's going to create you a business credit score. And ultimately, when you have a business credit score and a good consumer credit score, that's going to even take you to the next level.
Then that's going to help you get more cards that report to the business reporting agencies.
That'll help you get approved for more funding.
More funding, because there's a huge benefit of having all these cards that are outliers that don't report anywhere, because I can max those things out. Nobody knows I have them. It doesn't interfere with my ability to get other kinds of revolving credit. Like that's really a big strength.
Yeah. And so it's like the Chase, the Chase Business Inc. cards that reports to Experian. And it's kind of a good and kind of a bad thing. One, it's a good thing because it reports a high limit, but if you're utilized on that card, it's going to take a toll on your Experian small business score. So I kind of like how the traditional business cards don't report to either. But in that case, then you have to do the vendor trade lines and go through that process to build those out.
To build business credit. Yeah, that makes perfect sense. Outside of that, how often can I do this? If I come in, follow the steps of your coaching program, I get my consumer credit fixed, I set my business up the right way, do I go in and apply for all of this credit at one time? Is that best practice or does it matter?
It can be situational. It also depends on how many inquiries you have on your credit profile when you're starting. If you're completely cleared out, you can do a massive round on that first round. Once you get approved for these cards, get all these inquiries on your credit, then we like to go through the dispute process to get those inquiries removed. And then once they're removed, then go for another credit stack.
So you do a credit stack, get the max funding I can get, inquiry removal, which you have somebody that you recommend your coaching program that helps with that. Then I go back and do it the round. How many times can I do this?
We do that about 3 times a year, if not 4. It really depends on how fast people move forward on getting, building those relationships, applying for the cards, and then the process inquiries removed. Some bureaus like Experian are much faster to get those inquiries removed. TransUnion, Equifax, a little bit slower. So it kind of depends on how quick you can get those inquiries removed. But right when they're removed, right when you clean that slate, you go back, apply for more credit, and you consistently just keep going through that cycle over and over again.
So what else about these cards benefit wise is there that we haven't talked about? We talked about 0%. We didn't talk about any other, and we talked about them not reporting anywhere. Other benefits you can think of that I didn't ask about that these cards provide?
Yeah, for sure. I mean, so the points you accumulate through the spending. I've been traveling full time for 2 years now, and I generate hundreds of thousands of points every couple of months just based on my spending. So with these top cards, you're getting 1.5 points per every dollar spent, sometimes up to 4 points per every dollar spent. Once you accumulate these points on like Chase, American Express, then you can actually transfer these points to transfer partners like airlines or hotels and get massive, massive value. Also, the cashback cards, like the amount of benefits that come with these cards is incredible. Like a lot of people will not really utilize the points that come. And there's really a big strategy on how to accumulate the points in the best way possible. And then another strategy on how to redeem them, which is another massive section I teach in the program is, how to use these points. And like I said, I'm traveling full time. I'm utilizing my points, utilizing massive travel hacks to allow this, this lifestyle that I live, which is full-time travel, which is completely covered on the points I make through the credit cards.
And for those that don't know Jack, and if you follow him on social, it's crazy. Like, I go to his Insta page. He's in the coolest places in the world. Like, I thought I travel a lot. Like, he travels all the time in like the coolest places in the world. And he's done it because he lives what he teaches. I mean, literally, he's using this program to grow a business, 7 figures and beyond. And then on top of it, getting all these points back that he's then able to use in his world for travel. And he literally has a lifestyle where like, you're never even here. Like you're gone everywhere, which is just awesome.
Yeah, I have an apartment. I'm literally never there. It's in Miami. But one really cool travel hack I'll share with you guys so you can start using the strategy. The best transfer strategy is to actually transfer points from Chase over to Hyatt. Essentially, you go on Hyatt.com, you go to whatever destination you want to go to, you see how many points it takes. Say, for example, 40,000 points. You can then transfer those points from Chase over to Hyatt. When I was in Santorini last month, there were rooms that costed $1,200 per night, but only 40,000 points. So 40,000 Chase points is about the equivalent of maybe $400. And so I transferred my $400 in points over to Hyatt, and I was able to stay in a $1,200 per night room. So I 3x'd my value by this simple strategy. If I booked that same hotel on the Chase portal, I would have spent 120,000 points for that same room. So I 3x'd my gain right there.
Wow. Phenomenal stuff. There's so many things we could still dive into, but we're out of time. And I want to make sure that everybody knows where to go to be able to learn more, to be able to have their questions answered, and to get started with you and your team.
Yeah, 100%. My Instagram is a great place to find me. It's King of Debt on Instagram. I also have a case study I really want to show you guys. Basically walks through the steps and processes that I went through to go from 0 business credit cards to getting approved for $500,000 in just a year and a half. And so we'll post that link in the show notes. Also head to my Instagram, King of Debt. Link is in my bio. But yeah, watch this free case study. There's tons of awesome strategies you guys can learn from. And if you want to get working, schedule a call. We'd love to talk to you.
Jack, creditstacking.com, another resource, or we'd go with these two?
Yeah, creditstacking.com. That brings you to everything. Creditstacking.com, my Instagram, King of Debt.
Okay, awesome. Thanks for coming on with us today.
Awesome. Thank you so much, Ty. Thanks for everyone as well.
All right. So listen, if you're watching this, you're obviously here because you want to get money for your business. And like I said in the beginning of the show, I've never found a program as effective as credit stacking to do that. But Jack has given a bunch of insight here that even I didn't know. With all the stackers that I know in the world, his program does so much more than anything I've seen, because he teaches you these hacks. He teaches you the travel stuff, how to actually maximize the points, how to get the cards don't report anywhere so nobody knows you have them, so you continue to get more, how to go through and do multiple rounds per year, and on and on and on. So if you want to learn how to tap into this and get hundreds of thousands of dollars in funding to be able to get a business off the ground or to be able to grow your business, make sure you look him up at King of Debt on Instagram, King of Debt. And I'm also going to go ahead and put a link to his Instagram, a link to the case study that he mentioned on the show resources page as well. And if you go to creditstacking.com, there's a ton of info there. And I'm pretty sure all the social links are at creditstacking.com too. So some different resources. Make sure you look him up, King of Debt on Instagram. Also, make sure you go to creditstacking.com and check out the show resources page for a special case study where he's going to show you exactly what he did to be able to get himself to a point where he's got the lifestyle he has, where he's able to travel the world and be able to, live the life of his dreams. So make sure you check out those resources, creditstacking.com, King of Debt on Instagram, and the show resources page for the case study. And make sure you get in on this program to get probably more money than you'll even know what to do with. I mean, be starting multiple businesses instead of starting just one. Thanks for tuning in. Have a great day.